In 1946, a 28-year-old factory worker named Harold cashed out his entire savings, $2,000. Everything he had. He bought a small house in the suburbs of Chicago while his coworkers told him he was foolish. "The market is uncertain," they said. "Wait until things calm down." Harold didn't wait. That house cost $2,000 in 1946. By 1975, it was worth $40,000. By 1990, $180,000. By 2024, properties in that same neighborhood were selling for over $600,000. Harold didn't have a finance degree. He didn't have connections on Wall Street. He simply recognized a window that opens rarely in a lifetime, and he stepped through it. Most people don't realize that window is open again right now. Not because the market crashed, not because there's a secret opportunity only insiders know about, but because of a single number that changes everything. That number is $124 trillion. $124 trillion is currently sitting in the hands of one generation. And over the next 20 years, it is going to move. All of it. When wealth of that scale starts flowing, it doesn't just benefit the people receiving it. It reshapes entire economies, creates new millionaires by the millions, and rewards everyone who understood what was coming. I'm Julia, and today on Julia Invests, I'm going to show you exactly what's unfolding and why the people who act in the next few years will look back on this as the defining financial moment of their lives. To understand what's happening now, you need to understand what happened after 1945. When World War II ended, 16 million American soldiers came home. The government handed them the GI Bill. Mortgages, college tuition, small business loans. Within a decade, home ownership rates jumped from 44% to nearly 62%. A new middle class was born almost overnight. The people who bought homes in 1946, 1947, 1948, ordinary soldiers, factory workers, school teachers, became the wealthiest generation America had ever produced. They became the baby boomers. Today, baby boomers control approximately 52% of all wealth in the United States, roughly $84 trillion concentrated in a single generation. Here is the part that changes everything. The youngest boomers turned 62 this year. The oldest are approaching 81. Over the next 2 decades, that wealth will transfer to their children, their grandchildren, to markets. According to research from Cerulli Associates, the total intergenerational wealth transfer between now and 2048 will reach $124 trillion. $124 trillion. That is not a projection. That is an accounting of assets that already exist, held by people who are already aging. To put that number in context, $124 trillion exceeds the combined annual economic output of every country on Earth. It is more than 5 times the current United States national debt. It is wealth accumulated over 80 decades, about to move. The last time anything close to this happened was after World War II. That event created the wealthiest middle class in history. This one is 20 times larger. Now here's the question most people ask at this point. Julia, I'm not expecting a large inheritance. Why does this matter to me? It's the right question, and the answer is the most important thing I'll say in this entire video. The opportunity is not the inheritance itself. The opportunity is what $124 trillion in motion does to every asset class, every market, and every economy it touches. Think about what happens when trillions of dollars start moving. Inherited assets get liquidated. Real estate, stocks, business interests. That capital gets redeployed by a new generation with entirely different preferences. New sectors receive massive inflows. Asset prices shift. Entire markets reprice. This is exactly what happened in the post-war boom. The GI Bill didn't make every veteran rich directly. It injected capital into housing, education, and business simultaneously, and the rising tide lifted everyone who was already in the water. $224 trillion in motion creates the same rising tide at 20 times the scale. And the data already proves it's working. In 2010, the United States had approximately 8.4 million millionaire households. By the end of 2024, that number nearly tripled, approaching 24 million. More than 15 million households crossed the $1 million threshold in 14 years. According to the UBS Global Wealth Report released in 2025, the United States added 379,000 new millionaires in 2024 alone. More than 1,000 new millionaires every single day. Where did they come from? Not from selling startups, not from lucky stock picks. The vast majority were teachers, nurses, small business owners, and mid-level managers who simply stayed invested through every crisis, every correction, every moment of panic. They weren't smarter, they were positioned, and they stayed positioned. Understanding where this capital will flow next matters as much as knowing it's moving. Research from Bank of America shows that younger investors, those between 21 and 43, have dramatically different investment preferences than their boomer parents. 72% believe traditional stocks and bonds alone can no longer deliver above-average returns. As trillions transfer from boomer portfolios into millennial and Gen Z hands, the sectors that receive new capital will reprice significantly. Artificial intelligence infrastructure is already capturing enormous inflows in 2026. Clean energy, healthcare innovation, and emerging financial technology are all positioned to receive disproportionate shares of redirected wealth. Geographic positioning matters in equal measure. Markets where younger generations want to live, cities with technology investment, strong job growth, and economic momentum will see intensified demand as newly wealthy millennials pursue homeownership. The same $400,000 deployed in the right market versus the wrong one will produce dramatically different outcomes over the next 2 decades. Awareness of that divergence is itself a competitive advantage. Let me put concrete numbers to what consistent positioning looks like. A 35-year-old who invests $500 per month for the next 25 years, the approximate duration of the Great Wealth Transfer, at the historical average return of 10% annually, turns $150,000 in contributions into approximately $665,000. Increase the monthly contribution to $1,000 as careers progress, and the outcome crosses $1.3 million. Regular people, millionaire status through consistency alone. If the wealth transfer adds even 1 percentage point above historical averages through increased capital deployment and business formation, every projection shifts meaningfully upward. There's one more dimension almost no coverage addresses. Cerulli estimates that approximately $54 trillion will first pass to surviving spouses before eventually transferring to the next generation. Nearly $40 trillion of those spousal transfers will go to widowed women. This creates one of the largest emerging markets in financial services. Advisors, educators, and planners who develop expertise serving this demographic will capture business that compounds for decades. The transfer doesn't only benefit the heirs, it benefits everyone in motion around the capital. Here is what strikes me most about this moment. The information is completely public. Cerulli published the research, UBS documented the millionaire growth, the Federal Reserve tracks generational wealth data in open reports. And yet, almost nobody is talking about it. Because $124 trillion doesn't fit in a 30-second news segment. Because a 25-year wealth transfer doesn't trend on social media. Because the most powerful financial events in history are almost always invisible, until you're looking back at them from the other side. The people who became millionaires after 2009 weren't operating on secret information. They simply acted on what was available to anyone willing to look. Harold, the factory worker in 1946, didn't have a financial advisor. He understood one thing. Capital was moving, A new era was beginning, and the people who positioned early would benefit most. That same understanding is available to you right now. An action framework based on everything we've covered comes down to 5 principles. Maximize tax-advantaged contributions first. The 401k limit for 2026 is $23,500 with a $7,500 catch-up for those 50 and older. These accounts allow wealth to compound without annual tax drag, which over 25 years makes an enormous difference in final outcomes. Maintain broad equity exposure through low-cost index funds. Don't try to select which sectors will capture the most inflow. Own the entire market and participate in aggregate growth as capital redistributes. Build cash reserves for opportunistic deployment. The wealth transfer will create periodic dislocations when assets temporarily misprice. Having capital available when others are forced to sell produces the greatest returns in the shortest time. Extend your time horizon deliberately. Think in decades, not quarters. Staying invested through volatility is not passive. It is the active choice that creates the outcome. And finally, research where you own real estate. Markets attracting younger workers will significantly outperform markets losing population over the 25-year duration of this transfer. History records these moments only after they've passed. The veterans who bought homes in 1946 didn't know they were capturing a generational opportunity. The investors who stayed through 2009 didn't know they were at the beginning of a 900% run. They simply recognized that something significant was in motion, and they made the choice to be positioned rather than to wait. $124 trillion is moving. It is already in motion, right now, today. The question has never been whether this transfer would happen. The question has always been whether you would be positioned when it did. You now know the scale. You know the timeline. You know the strategies that turn this knowledge into outcome. What you do next will determine which side of this transfer you end up on.